Hi, and welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. So I've been working with institutions for over 30 years now, and most institutions don't really like to buy breakouts, right? They don't really want to chase something. They tend to like to buy stuff on weakness. Even the guys that are growth managers tend to buy stocks when they've pulled back or gone through a correction. So for over 30 years, I've been trying to help in that regard. Well, I've fine-tuned that from a trading standpoint. Most of the stuff that I apply to institutional work on a long-term basis, I learned by trading very short-term in a very short-term manner and then applying it to longer-term time frames. And so I want to give you an example of that today of how to play pullbacks. Pullbacks, I really like pullbacks from a standpoint of I don't feel like I'm chasing. I'm got some key criteria, so let's go ahead and get into the agenda. So I like to look at, there's about 3 things that are I think are crucial. Now, there's a lot of details in each one of these, and I can't go through the whole thing in this quick lesson, but I can give you a really good idea of what to expect and what to look for to make sure that you're at least following some minimum criteria. Let's go ahead and get into this lesson now. Okay, so I'm starting out with the S&P, the spider, and I've got a 10-minute chart on the left and a 2-minute chart on the right. I like to show different time frames. I mean, the patterns that I use work in all. I've used them intraday, I've used them monthly, weekly, and basically everything in between. And so what I wanted to do is show this pullback on an intraday basis after a big gap up, and it's an unorthodox pullback. It's not your classic pullback, and I wanted to do that on purpose because I wanted to show and really explain these 3 things, what we're looking for, what needs to take place. And it will be different on every single pullback. Every pullback will have its own unique flavor. But if you can stick with certain criteria, I think it'll keep you on track. So let's just start evaluating. So the first thing we want to do is look at the higher time frame and confirmation from that. So are we making a higher high? We are. Now, on this move to the upside, we want confirmation in MACD and we want confirmation in ADX. One thing I really like to see during the pullback phase is the ADX to stay above 25. I'll get this 25 line. I really like it when the ADX on the higher time frame and the DI, the green DI, which is showing the strength of the buyers, stays above 25 throughout a pullback. It just shows you just have a lot of strength in the move. All right. But this is the confirmation we're looking for. On the way up, do we have it? Do we have confirmation? We do. All right. So that's step number 1. Now, I mean, I put a course together that has about 150 videos, whatever. And I go through a significant amount of detail and, MACD and ADX and these type of pullback plays. And so, I'm trying to take it down to bare bones minimum just to if you don't have these 3 things, then you really shouldn't be playing a pullback. All right. So step number 1 is making sure we are basically trending to the upside in some way, shape, or form. I like to see price making a higher high. I like to see MACD and ADX confirming that move. All right. So we have step number 1. That's check mark. Now we go to the lower time frame. And this is where I think pullbacks get a lot more difficult. What I've noticed with guys that I work with is they want to put everything in a box and be able to almost turn it into a mechanical system that says, okay, if this happens, I'm doing it. And it's going to be the same. If this happens, I want to get in. All right. And unfortunately, it just doesn't work that way. You're going to struggle if you think that this side of the equation, the lower time frame, is going to look different each time. Now, obviously, the way this pulled back and how many bars it was to pull back, it's a lot different than this pullback. All right. And that was only a 3 to 5 bar pullback, which is kind of your classic pullback. I'm going to show you in a minute why this was not a signal. All right, because we use the smaller time frame to ferret out these bad signals. All right, but anyway, if we look at this one, we've got a pullback in an uptrend that has confirmation. But when we go to the smaller time frame, look at what's happened. We have reversed the trend. We've basically turn things to the downside. So in my course, I refer to this as a trigger 4. So this means when we've reversed the trend to the downside, that means you have to reverse the trend back to the upside. You need a little bit more confirmation. All right. Now, I measure that trend strength based on the price action using a zigzag. I use it based on the MACD. I also want to register the strength of the decline based on the ADX. And I also use the moving averages, all right, and what they're doing. But in order to look at the confirmation of this, all right, to determine whether I want to keep watching this, I'm going to use the ADX line. All right. If the ADX stays low throughout a correction phase, even if it's a severe correction like this, where you're making a significant amount of lower highs and lower lows, you've turned the moving averages down, you went into the zone, went to a new low, right? Even if the MACD overruns the zero line in a strong way, if you have all that, I'm still going to watch this trade if we have no sign of strength on the sell side. To me, that's the lower time frame confirmation. So I've got the confirmation to the upside, measuring these things, and then to the downside, I really want to focus in on the ADX strength. Now, this might not make sense to you, but if you think about it, the decline phase is based on the red. It's based on the sellers. And if the ADX stays low during that phase, that's telling us that the sellers are just not that strong. So if the sellers are not that strong, and I know the buyers were pretty strong on this side, my bias is to play this to the upside. So that's exactly what I want to do. Now, so I've got step 1 here and step 2. Now, this looks a little unorthodox. It's pulled back pretty deep, but I have met the two things that I'm looking for step 1 and step 2. I've got confirmation of trend strength, and I've got confirmation that the decline phase was not that strong. All right. So as long as that's the case, I'm going to still watch the trade. Now we get to the trigger point. Now, what happened on the 2 is going to determine the 3. How much confirmation do you need? If the lower time frame confirmation is showing confirmation here, it's showing confirmation here, it's really strong, it's not pulling back very much, we're not going in the zone, we're not creating this pattern of lower highs and lower lows, maybe we just do an ABC down and that's it. And if that's the case, then the trigger is going to be a lot quicker. In this case, because it was such a long decline, we need to reverse the trend on the smaller time frame. And I would probably be waiting for this signal here. This seems like a long way. You want to buy a pullback, right? And you're waiting for this here. But remember, we really want to get in on this trend. We're using this time frame here to get in on this time frame. This is the trend we're playing. This is the trend, and this is going to help us get into the trend. Now, it looks like it's really late getting in here, waiting for this higher low after the trend line break and a reversal basically that takes place, and you get the pinch play, essentially green DI starting to kick in again. So why is this, this might look low, but if you look at it on this chart, you're really looking at it right around here, maybe a little one bar up above of that initial reversal bar. So it's really not that late if you're trying to get in a trend or a new emerging trend, or playing a pullback for a leg to the upside. Typically, if I see this move with this confirmation, I'm expecting at least a minor new high, well, at the very minimum, a test of the high, but I'm really, in most cases, looking for some kind of a follow through to the upside and maybe carry into new highs. So if I can get in here, somewhere in this range, I still have a chance, I think, to make pretty good money. And so because the decline was long, you got to wait for a little bit more confirmation. So anyway, I hope this helps in your understanding of the 3 things that I believe are really important in playing a pullback. All right, let's go ahead and get into the individual symbols now. So if you're enjoying the video, hit the like button and also subscribe so you can get notified on any new content coming out. Just briefly, my services can be found at rabilstockresearch.com/services. And that does include the information on the trading school. I'm referring to it as a trading school because I did add a swing trading course on top of the foundations course. So if you have questions, I get some questions each week on that. Go to that link on the services page of rabelstockresearch.com, and you can click on the link, that Trend and Momentum School, and it'll give you pretty much all the information that you need. So let's go ahead and get into the individual symbols now. Okay, I'm going to finish up with the thought on the SPY, which was this pullback I mentioned, and why we wouldn't take this, taking out this prior bar's high and even a 2-bar high. Well, number one, on the pullback, we actually had overrun where the MACD did cross down below the signal line. But let's assume the buy side of the equation looks good. In other words, the upside move, the first criteria on the up move had confirmation. Even on this pullback, if you look at this pullback, there really wasn't much on the sell side, right? I mean, we had ADX, so we would have wanted to keep watching this. The problem is because there was so much overrun on the MACD below the zero line, this is not a trigger. This up move is not a trigger. We'd be waiting for more confirmation, and in the process of doing that, it actually broke down and invalidated the trade on this side. We would no longer be looking for a buy signal anymore because of this invalidation to the downside, and we recrossed the 18 and it wasn't rising anymore. So I like to use 2 time frames for this reason. You can look at these pullbacks, and a lot of times if you look at the daily or look at the higher time frame, in this case the 10-minute, you can get sucked in sometimes. But if you go to the lower time frame and meet the criteria we're talking about, it's going to reduce a lot of wrong trades or bad trades, in my opinion. All right, let's go on to the list now of symbol requests. And I did add a few of the indices as well as a few sectors, and I have I want to talk about KMB for a minute as well. And the reason is that there were fewer requests that came through this week, and I know we're waiting for something, for the market to do something, right? I mean, there's just nothing going on right now. It just stays contained in a pretty tight range, especially in the S&P. But now is the time to be evaluating what stocks we really want to be watching closely. So that is my opinion. Send over the requests if you have an interest, and we can go through so we can be prepared for a move either to the upside or the downside. All right, the QQQ. So it is moving to the upside, right? I mean, we're making higher highs and higher lows. And you can see on a relative basis, let's just zero in on this. You can see we broke the downtrend line, and now we have the 30 of the RS line rising underneath. I mean, on a relative basis, it is pretty impressive what's going on. We're still above a rising 18-week line. We can see that. The only issue I've got, and I mean, this is maybe not exactly what's going on here, but it has this sort of feel of a rising wedge to me because we just don't have the strength on an ADX basis in these trends. And we had it here. So this up move in the QQQ had pretty good momentum characteristics on the daily. It had it back here on this up move. And now we've consolidated. We've gone to a new high, and we're not seeing it yet. I mean, it's not to say that it can't happen. I'm just saying right now, I don't see, this is still, the ADX is still down at 19. It can move up to 25 while this gets up to like 330. And it's just going to look like it's overbought as this is trying to cross above. So you got to be a lot more careful when that is the situation here. So we're at a new high. We don't have confirmation yet. Yeah, the MACD is turning up, but I want to see a little bit more power behind this move before I get really all that convinced that it's going to accelerate. All right. I know the trend is up, but the problem I've got with it is that we are crossing below a declining 18-month line. And so I like the pattern where we move up, we pull back, and then we break out. Like we have a really strong move that has confirmation on an ADX basis. We don't have that. To me, this is more of an upward drift. And it doesn't mean we can't go up to the next resistance zone, and we probably will. But it doesn't lend itself to really great trading opportunities. All right, let's look at the Bitcoin, because I think this is actually pretty critical for Bitcoin, what's going on here. We had this move. We finally got back above. Let's just zero in for this for a second. So we had this declining 18. It couldn't get through. And then this green bar, I highlighted this coming through here because this started to flatten out. And then we actually pulled back and held this line. Felt like we had room up to the next resistance zone, which is this level right here, right? Let's just zero in on that. So we rallied up to that level. MACD has turned, has a little bit more momentum than on a weekly chart than the QQQ does, right? But what happened here is that we've now run into the 18-month line that is declining. So we're up 3 to 4 months up, and now we're stalling at this line. So I think this is really critical, the reaction here. This would be one of these signals that I would say where, the dog doesn't bark. It's the signal where Sherlock Holmes says, hey, the dog should be barking, meaning we should be seeing sellers come in. And if the sellers don't come in here, I think that would be a really bullish sign. So we've started to see a little bit of selling, but it hasn't really broken things down. So we want to see if we get selling to come in. If it doesn't over the next 2 to 3 weeks, you could assume that we can start to see a move up into the next level. So the reaction here is really key to monitor. All right, let's look at KMB. I do want to talk about this breakout pattern because I talk a lot about pullbacks, and I actually think the breakouts can be a little trickier. And the reason is that we've got this move, we're taking out this key level, this prior peak, been consolidating for a while, and we get this move to the upside and we take out this level. But look, it's up 6-7 weeks in a row prior to the breakout. So when I see a wide and loose breakout pattern, I'm more inclined to want to let it pull back a little bit. The other thing that you can do to help you determine whether this is really overbought or not is to go ahead and zero in on the monthly chart, because we had this big, huge green bar. That's bullish, correct? But what it does is, and this is straight out of the first section of my course, is you see how this has gotten stretched away from the 4? I would love to see this spend the balance of the month without doing a whole lot and just sitting in the upper end of this big bar and not moving. And what would that do? Because when we start a new bar, this is going to jump up, and now all of a sudden the 4 is going to provide support on any kind of hesitation or pullback in the next month. Right now we're only in day 11 of this month, so I just like to see this work sideways a little bit more. That feeds into what I'd love to see on the weekly chart, which is a little bit more of a pullback. And then we've got this pullback on the daily chart. We've got rising moving averages, but look at what the MACD is doing. Look at how extended the ADX got and starting to turn down. And the other thing is we've got a little bit of sign of selling on the hourly. So this means we went into the zone and came out. This means we have turned the trend to the downside on the hourly. So that means we have to turn the trend back to the upside on the hourly before we'd have an interest. And if this rolls over before that happens, then we have to wait for the weekly. All right, just keep using these multiple time frames in this way. Right now, the hourly is telling you don't need to be in a big hurry to buy this pullback on the daily chart. Okay, let's look at XLI. So I wanted to just talk about a couple of the XLs, these major sectors, and let's just focus in on the monthly, because you see how this moved up and it's been pausing above a flat monthly line. If we can turn up from here, this is going to look really good in a very short period of time. It would not take very much to get this to look good. This could look like a very bullish pattern. If we go to the XLF, we could move up from here, and all we would be doing is be hitting the resistance from the 18-month and this prior top. This is not the condition that I'm looking for. This is going to take more time to get out of this rut that it's in, right? And where the XLI would not take very much time at all. Now, if we go to the XLY, yeah, it has this problem of this 18-month line rolling over. But I want to zero in on the weekly chart here because this is a very quiet pattern. Do you see how quiet this has gotten? We had a swing to the upside and then a swing to the downside. And then we've remained contained in here for about 6 or 7 weeks, really since the beginning of April, doing absolutely nothing. I think if we can cross above 150, you have to sort of assume we've got a little bit of a trading move. Now, I do know that it's fighting the monthly line, but it doesn't mean we can't go through it or penetrate it. It just means we're probably not going to trend to the upside. So you could treat this as a trading play with a move coming up through 150 in a low ADX condition and treat it as a breakout because this is really a tight pattern. It's not wide and loose like the KMB. It's not coming from a big area. If we break through 150 in this, we should see follow through right away if it's a good breakout. All right. All right. Now, I do want to evaluate the difference between Google, which I like the look of, and versus the Amazon, which I'm not as big a fan. All right. And so we're dealing with these nuances because both of these stocks are fighting a declining 18-month line, right? But the difference here, and I think is a little bit better, is the MACD is holding or turning at the zero line with the signal line above. Okay, that's number one. Number two, we have a pretty good full-fledged reversal where if we take the 1 here and the 2 here and then the 3 here, we've got a little bit of evidence based on the price action that we are going to get through this 18-month line. Now, it doesn't mean that it doesn't have to hesitate at some point, but we could get a trading move out of this. The other thing that's just jumping off the page is look at the difference in the relative performance in this. This is really improved dramatically on a relative basis, and it started way back here on this initial move off this low. So we broke the downtrend line, and then off of the 2 tests, this move to the upside, we started to see a lot of improvement on a relative basis. Okay, so those are all really good criteria telling me, and then look at how tight this got prior to breaking out. You see how if it would have broken out from here, then I'd say, okay, we need more confirmation. It needs to pull back and hold. But instead of doing that, it went up to the breakout area and consolidated. And then I'm saying, wow, you know what? I mean, if this can get through this area, we probably are going to get some follow through to the upside. It looks like that's what's happening here. Let's evaluate that relative to what happened in Amazon. So we've got the same issue on the with the 18-month line declining, right? But we don't have the trend line break. So let's just look at this on a weekly chart with the trend line analysis. I have a trend line. I'd have to draw it basically like this. We are just about to get through the trend line, right? I mean, I can't really use this as my anchor point because we didn't go to a new low. So in terms of following my rules, I would have to use this as the anchor point. And in doing that, we are just crossing above. Notice how the MACD is just getting to the zero line. And look at the relative performance. The relative performance line is just not as good. We still are really below this trend line, and we're just getting up to it now. So there's little small things, and then we don't have that same pattern where it got really tight right up against the breakout level. So just across the board, if I'm evaluating these two stocks, I had this question come up to me with an institutional investor this week. Which one did I like better? And I just wanted to go through all the reasons why. I just, over the last 4 or 5, maybe the last 2 weeks, really, I've really liked the looks of Google over Amazon, and I think it's going to perform better. I know it is in the short term, but I think it has a little bit more of a chance for that to happen. Okay, let's look at GWW. So we've got a move to the upside here with pretty good momentum, and then we pull back. And if you notice, we've slipped a little bit on a MACD basis. And again, when I see that, I'm thinking more of a W pattern to form. Most of the time, it happens in the form of a lower high and then coming down and then coming back up through that. But in this case, it actually made it back up to the prior high. But I still think we want to come back down and check back to the 18. And then if we can get through 700, it looks looks a lot better to me. This is a low ADX condition on the daily chart. So we need to break out. We got to get through 700. We're stretched away on the monthly chart. We're too extended on the monthly to play this off the weekly. We have to trade this off the daily. Use daily risk trading this trading this stock. All right. I don't want you to think that this is a long-term trade. I'd look at it more as a short to intermediate term move. So just keep that in mind. Now, look at what's going on in Costco, and I like to evaluate the swings. We had this one big swing to the downside. There's our markers for that swing, right? There's a swing. And then we had another swing here, right? Mark those off. Now we have another swing here, another swing here, and look at what's happened. We are making inside swings over and over and over again. This is compressing. This pattern is compressing, and it's getting ready for a move, and it could be in either direction. However, for me, I am more inclined to believe it's going to break out to the upside. And why do I feel that way? Because typically, not always, but typically, you're wide and loose when you're topping in a topping pattern. You have more volatility. When you go through distribution, you have these bigger swings that take place. It doesn't usually quiet down and compress like this. So I'd be watching for a move back up through this 528 area. Thanks for joining us today. My contact information is listed. Also, if you have any stock requests, send them to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.